Hello traders, you're welcome to part 3 and the last of the market structure a step further series. In this part, we are going to be focusing on deep pullback and shallow pullback with reference to two particular types of point of interest that we are going to be focusing on. So without much ado, we move straight to what we have today. Firstly, we are going to be looking at the shallow pullback situation in a bearish scenario. We already know that this is the impulsive move, the retracement, and the impulsive move. The first point of interest we can get by looking at the zone that sponsored this impulsive move. So this is the zone that actually sponsored this impulsive move. That is our first point of interest. Our second point of interest is going to be the zone that sponsored this retracement move. You can see in the case of the impulsive move, we have this move, clearing liquidity and breaking structure to the downside. We mark that as our first point of interest. The second point of interest is going to be this move that actually sponsored the retracement. You see that this move cleared liquidity below, break structure to the upside, and then sponsor this retracement move. That is going to be our second point of interest. And if price ended up actually reacting or reversing from the second point of interest, then we have a situation known as a shallow pullback. Or we can as well have price reacting from or reversing from one of the points of interest from the internal structure. So in that case, we have what? A shallow pullback. Okay, this is the bearish scenario. Let's look at the bullish scenario. They're all the same thing. So we have identified our first point of interest and our second point of interest. The price actually reversed from the second point of interest, okay, and then continues higher. Then we have what the situation that we can best describe as a shallow pullback. Okay, but if price, as you can see in this bullish scenario, price tends to react from this first point of interest. This second point is the first point. So if price tends to react or reverse from this first point of interest, then we have a situation known as a deep pullback. That's also going to be the case of the bearish scenario. Price is reacting from or reversing from the first point of interest. Then we have a deep pullback situation. Okay, so let's look at the real chart to just try to explain what we have. For instance, we have this downward movement, this bearish movement, and we can identify this point of interest that led to this impulsive move. Okay, this is going to be our first point of interest, and this is going to be our second point of interest, because this is the point of interest that actually led to the retracement move here. It's actually the refined one, because we have to consider this whole move that actually cleared liquidity, but can be refined to this particular level, particular block, this other block here, and this whole move that cleared liquidity and the break structure can also be refined to this particular zone. Okay, and we can see that price actually reacted from here at first, but still went to do what? Went up to finally reverse from this our first point of interest. So this situation is known as a deep pullback. Most times we get a reaction from here before we actually get the full reversal from our first point of interest. This scenario is, I think, also very common. Then you can see once again that we have gotten what? Another point of interest, first point of interest, and then the second point of interest, just the way we have described. And what are you noticing? That price is actually reacting from the second point of interest in this case. So we're going to look at another example. We have this price is actually in an uptrend in this situation, and we see that this is the move that clears liquidity, breaks structure to the upside, and then continue this impulsive move. And this is the move actually that did what? That created this retracement. So you can see that we have this entire move that created this entire point of interest, refined to this level, this zone, and you can see how price actually came, reacted from it, reacted until the price went further downwards to target this what we'll call the first point of interest. Price at first reacting from the second point of interest, and eventually came to clear this liquidity below and give us a very deep pullback, reacting from the first point of interest. So it is much safer to actually wait for price to react from this zone that has been refined from the first point of interest. In most cases, it is much safer. Okay, I hope that you understand what I'm trying to say. We have, in this case, we might refer to this as the pullback is more shallow as compared to this pullback, especially when you notice that there is liquidity inducement. Always expect most of the time for price to have a deep pullback before it takes off by breaking this structure to the upside. Okay, now when that is done, this becomes our next point of interest. So you can see once again that this is the move that clears liquidity and then breaks through to the upside and continue and give rise to this pullback. This move gave rise to this pullback. Okay, so we can select the whole of this as our second point of interest, and this move that clears liquidity here and breaks through to the upside. Please don't get confused about it. This entire move, this entire swing, clear liquidity and break structure here to the upside that continue this impulsive move is going to be our first point of interest. For this entire move, as you can see, we have a point of interest here. So this is first point of interest number 1, first point of interest number 2. These are the refinements of our first point of interest that led to the impulsive move, and this is a refinement. This portion here is a refinement of the second point of interest that led to the retracement move. You can see our price actually, after breaking this slightly, came and actually react from here to give us this move. But then at the end of the day, price came and did what? Price came back and did what? React from this point of interest, even though this was also very likely that price could have reacted from it as well. Maybe going forward, price may still come and react from this point of interest. So with that, I think this is where I'm going to draw the curtain on this series of market structure, a step further consideration or a deeper look at market structure. And I do hope that one way or the other you've gotten some value. Thank you for your time, and please like and subscribe. Happy trading.